Hi, folks. For those of you who I've yet to meet, my name is Rachel Lieblein-Jabala. My pronouns are she, her, and I am the programs manager at the Spencer Educational Foundation. I'm so excited and thrilled that you're here with us today for today's presentation on understanding the carrier value proposition. Just to give you a little sense of Spencer and who we are, our mission is to fund the education of tomorrow's risk management and insurance leaders. And we're really thrilled to be offering this webinar series as a free offering for current students and recent graduates who are interested in the risk management and insurance industry. This is the third webinar in our 10-part summer series. And like I said, I'm really happy to see some familiar faces and some old ones, or new ones, excuse me, as well. It's great to have you here. I have a couple of housekeeping notes before we dive into today's presentation. The first thing, if you didn't hear me say it before, please feel free to write in the chat where you're calling in from, your university, or where you're interning or working currently. And also, if you wouldn't mind sharing with us a little bit about a note about your career aspirations, what you're hoping to do next. I'd love to get to know you a little bit more in that way. And also feel free, make this fun, make this exciting for yourself. If you see someone that you want to say hi to today, message them in the chat, say hello, make this exciting. And Dane and Tim will mention this as well, but we welcome all questions throughout the presentation and at the end. So if you have a question, you can either raise your hand or write that in the chat, and I'll pause Tim and Dane as they go through and they can address those questions as we go. And then my third point is just that this meeting is being recorded and will be posted to our website after the fact, so you can revisit any information or share the session with folks who weren't able to attend live today. And now it's my pleasure to introduce Dane and Tim. Thank you so much for being here. Dane Lopes is the Chief Communications Officer at Everest Re Group. Dane is responsible for Everest Re's corporate communications strategy and provides strategic leadership in the positioning of the company with all audiences, so investors, clients, brokers, employees, and the media. His areas of executive oversight include global brand marketing, corporate advertising, global media relations, investor relations, communications, and employee communications. Previously, Dane served as the Chief Commercial Officer of Everest Insurance, at which time Everest was the fastest growing specialty P&C insurer globally. Prior to joining Everest, Dane served as the sales leader for the U.S. East and South regions at Swiss Re, and he holds a bachelor's in mechanical engineering, right, from SU, Dane, which is, I'm from Syracuse, so we have that in common, and his MBA in marketing from Seton Hall University. And our second presenter, Tim, I'm so happy to introduce. Tim is the Vice President of Marketing and Distribution and Real Estate and Hospitality Practice Leader at Everest Insurance. Sorry, I'm just admitting somebody. There we go. Tim is responsible for Everest's key account management program, including driving the One Everest strategy and the formation of Everest's Risk Manager Advisory Council. He is also the practice leader for the Real Estate and Hospitality Group, with the additional responsibility of overseeing and management of several retail insurance broker relationships. Prior to joining Everest, Tim served as the Chief Risk Officer of CBRE Group, with global responsibility for enterprise risk management. He holds a bachelor's from New York Maritime College, and Tim was also a past board member of Spencer. Tim and Dane, thank you so much for being here. I'm going to pass the floor over to you.
Great. Thanks, Rachel. And I'll get started and then I'll turn it over to Tim. I'm Dane. Wanted to start by thanking everybody for joining us today. Really appreciate your interest, and really a special thank you to the Spencer Educational Foundation, to Rachel and to Megan Miller for inviting us to participate today, and we're happy to do it. If you go to the next slide, you know, when you want to talk about understanding the carrier value proposition, for Everest, you know, for us, it all starts with culture. We'd like to think that culture is our secret sauce. It's what makes Everest a little bit different than others. And, you know, for most insurance carriers, you know, what we represent is a promise to pay. When somebody has an unfortunate event happen to them, the policy is going to pick up coverage. So that's the promise. That's what every insurance company is designed to do. So you talk about the value proposition, you're trying to determine what makes one company different from another. Financial rating can be part of that, but we're not going to talk about financial ratings today. policy wording. There could be slight differences there that could make a difference, but really today we're going to talk a little bit more about what makes a company a little bit different. Before I get started, for those that don't know, Everest is a large global P&C company that has a reinsurance arm and an insurance arm. The reinsurance arm is a top 10 global reinsurer. And as Rachel mentioned, the insurance arm has been the fastest growing specialty P&C insurer globally over the last 5 years. Publicly traded company, ticker symbol RE, and finished last year just north of $10 billion. So it's a good sized company. When I look at Everest and I try to think about our value proposition, I think it starts with our culture, as I mentioned. And the tenets of our culture are kind of shown on the screen. One of the things we pride ourselves on is the talent we've been able to build. And I think that really shows with the expertise we have in-house. We look at a thoughtful assumption of risk. So we're in the risk-taking business. We're in the underwriting business. If we do it right, we should make money. We're all about profitably taking on risk. We've built a culture focused on execution. For us, that's about getting things done and being quick and nimble to the trade to help our clients and brokers solve their most pressing insurance problems. We want to be efficient, and that shows in so many ways throughout our organization, whether it's our low expense ratio, so that's financial efficiency, or it can show in the flat organizational structure we have with underwriting authority in the field that really allows us to deploy our capital quickly and in an efficient manner. We all try to be humans first, right? And humility is a big part of that. We want to be caring and respectful. And I think this is where some folks get a little bit confused. Humility isn't about being wimps, right? We're out here, we want to win just like everybody else, but it's about trying to do it without ego. We look to have all of our employees be leaders at what they do. And collaboration is the hallmark of everything we do. As my old boss used to say, collaboration is something you do, not something that happens to you. You actually have to try to collaborate. You don't wait for somebody to collaborate with you. And then the last one, and maybe the most important one, is diversity, equity, and inclusion. We are at our best at Everest when we can bring our full selves to work. And it's something we're really proud of. It's something that we spend a lot of time and attention on. We've spent a tremendous amount of time listening to our employees in the last year and a half, particularly after the incidents with George Floyd. We had listening sessions with all of our colleagues, and we've stood up a number of employee resource groups, and including one that I'm the executive sponsor of, and that's our LGBTQ+ employee resource group. So we've really championed and embraced diversity, equity, and inclusion throughout the company. Next slide. The other piece of the value proposition, I think, when you're talking about a company, is when you look at ESG. For those that aren't familiar with the terminology, it stands for environmental, social, and corporate governance. And that's something that more and more is becoming so important for all companies, but also for investors. They want to invest in companies that do good by doing well. And we believe that a sustainable future for our company encompasses the values important to both our clients, our brokers, our employees, the communities in which we live and work. And they define our corporate responsibility and guide us to pursue sustainability. So we're always looking to align ourselves with environmental initiatives. As I mentioned previously, a strong commitment to DEI. We do a tremendous amount of volunteering. And then strong corporate governance is a big difference maker for us. So when we start looking at a value prop, we talk about the culture, we talk about what the company stands for. And now when I get to the actual insurance team that Tim will build upon, if we go to the next slide, I'll kind of just tell you what we set up our distribution team to do for insurance. Our distribution team is a team of employees that handle all of our client relationships, all of our trading partner relationships with all of the retail and wholesale intermediaries we trade with, as well as our delegated authority business. And in this regard, our mission is to enable our underwriting teams to be more effective and more efficient, more connected with our trading partners. And our job is to help deliver the quotable opportunities that our underwriters want to write and then utilizing our relationships, our influence, our knowledge of the account to help bind the business we quote. And if we do it well, we'll bind more than our fair share, and that's been our goal. And, all along the lines of building a world-class distribution platform that will really strengthen the Everest brand and support profitable top-line growth for the company. And with that, I'll turn it over to Tim.
Good afternoon, everyone. Just to give you some context about my background mostly falls in being in the risk management space. I spent time, most of my career, in being a risk manager and ended up being a chief risk officer. And for those early in their careers, what I'd share with you, it's probably the most important takeaway is don't be afraid to try something new. Even if you're not an expert at it, ask people, learn, take risk. When I say take risk, it's just being uncomfortable at times is a good thing, right? So for all the people on the call who are new to the business, your career where you sit today, when you look back on it 30 years from now, I hope that you'll have a career like I did, which was very, very, for me, gave me a lot of opportunities to do different things and kept, for me personally, I never was bored in my career in the insurance business. People ask me all the time, what do you do, Tim? Explain what a typical day is. And I say, a typical day, there is no such thing, right? You're always dealing with, whether when you're on the risk management side, contracts, a claim, policy wording, etc. So again, I encourage all of you as you go throughout your career, don't be afraid, be uncomfortable. Being uncomfortable is a good thing. So with that, I'll also mention that Everest, when I left the risk management side, I actually worked at Prudential Financial when Everest was spun out back in 1995. So back then it was called Prudential Re. So for those who don't know the company, Dane gave you the background, but we're a company that's over 45 years old and 25 years this past year being a publicly traded company. So again, outstanding organization, a lot of depth in our products and services. So starting out on first of this slide here, overarching objectives, we talk about sales. And at the end of the day, the lifeblood of the insurance company is underwriting, right? The ability to underwrite risk. And so the important part of the marketing distribution team is to collaborate with those underwriters to achieve the financial goals of the firm. Every one of the product lines has a risk appetite. They also have a budget that they're trying to hit. And it's our job to help leverage the relationships with the brokers, our broker partners, both retail and wholesale, because we have a multivariate distribution channel, and ultimately drive one Everest cross-selling opportunities. And that's how we think of the sales part of our organization. The marketing is the brand. I mean, the brand Everest, I know when I first joined the firm, Dane, I worked for Dane, and I told Dane that when I thought of Everest, the top 5 insurers, it didn't come to mind, even top 5, 10. Well, our job is to help make sure that our company can stand up against any of the major insurers out there. We have 150 products and services that we distribute throughout the globe. And a lot of people are unaware of that. And so the job of the market distribution team is to make sure that we're out there and we're talking about the brand. And last is that distribution. Create, and execute our multivariate strategy. What we mean by that is retail, wholesale. We have different ways of managing performance with our broker partners through KPIs. We also have contracts with some of those brokers as well. And then utilization of tools, as you're probably all well aware, the brokers have tools that we can actually look at their book of business as an insurer and map out what our risk appetite is against what their book of business is, and then thoughtfully try to come together with the underwriters so that funnel of risk opportunities coming to our organization comes down to a much more successful hit ratio when it comes to the submissions that are coming in the door. Next slide, please. So this is our client engagement strategy. And, the thing I'd say here, I try to also think about when I was a risk manager, what did I want from an insurance company? Dane mentioned before, first and foremost, financial strength, because at the end of the day, people don't think of insurance unless there's a claim. And when there's a claim, people always want to know, is it covered? That's the first question I'd hear from anyone in the organization. And, having an insurer that one has the financial strength and the ratings, but also not just the ability to pay, but willingness to pay, right? So to me, that's very important that, as an insurer, we're creating that relationship with our broker partners and our clients that they know that we're going to stand behind the contracts that we enter into with them. And then as far as an approach, to me, it's about no surprises. All right. Dane mentioned the culture, but at the end of the day, we want to make sure that between our broker partners, our clients, and even within our organization, there's no surprises. No one likes surprises, no matter what business that you're in. And then lastly, I like to think about, trust is very important in a relationship with your broker partners and clients, but also the whole idea of bringing all the stakeholders together through consistent and communication. And again, this is where mutual success is achieved, is through that constant dialogue. And we mentioned earlier about our culture, about collaboration, which is one of the reasons I joined Everest. I remember when I first started talking to Dane, almost 3 years ago now, it was the culture that drew me to the firm. A very flat organization, nimble, we can make decisions quickly. We also used empathy. And again, Dane mentioned empathy doesn't mean you're a wimp, but it means, we're going to be that company that thoughtfully assumes risk and works with our clients, right? And at the end of the day, for me, it's also speed of execution, sense of urgency. Next slide. So how do we do this? This is our strategy, and off-cycle client and broker meetings are key to that. So throughout the year, a person like myself, I mentioned earlier, or was mentioned by Rachel, I have a responsibility for 3 of our broker relationships, making sure those meetings are taking place, that we understand what's coming in the funnel, where we're being successful, where we're not being successful, how we can do a better job working with our broker partners to achieve not just our goals, but also the broker's goals and working with the client directly. Off-cycle meetings, we're out there all the time with the clients. Obviously with COVID, that totally turned upside down on its head. How do we get to our clients? And I don't know about everybody on this phone, but I'm pretty tired of Zoom calls and all the other different ways that we communicate. I'm now getting out there. I'm an avid golfer, so I'm spending time out there playing golf with clients and brokers, and it feels great to be able to spend time together with people and not wear a mask, quite honestly. But again, really important that constant communication, so there's no surprises. Stewardship meetings. To me, when I was a risk manager, I didn't want a big, thick book at the end of the year that just talked about all the good things that we all did. I also wanted to talk about the things that we needed to improve upon. So it was really important that these stewardship meetings drove future success and making sure that anything that needs to be corrected or changed so we could pivot and do better in the following year. Thought leadership, right there, COVID-19. Our company did a phenomenal job of getting out there. We have a technology solution called Zero. We use that in our own shop today. I come in the morning, I have to sign into the firm. A series of questions are asked. And at the end of the day, Zero, that application is monitoring our employees coming and going. And also one of the questions we recently asked, voluntarily, of course, is if you were vaccinated or if you intended to get vaccinated. But again, that's available to our clients as well. So when I was a risk manager, health and safety reported to me this product called Zero, or technology called Zero. I wish I actually had that tool, because for health and safety, for human resources, for managing claims overall, it's a really good tool, and it's something that we spend a lot of time on working with our clients. Online engagement, for those who aren't signed up and following us on LinkedIn, please do. We have over, Dane, 15,000 or more followers? I can't remember what the number is. I know when I joined it was 5,000. How many do we have, Dane?
I think that sounds about right. I'm looking it up.
Thank you. But again, that's a great way, online engagement, and obviously, we're here representing Everest, but it's a good way to just follow companies and understand, management changes, people changes, new products. And we've put a lot of information on LinkedIn as a firm. And then supporting industry and client events. Just like we're on this call today, Dane and I spend a lot of time, whether it's in RIMS type of meetings. I was on the board of Spencer, but the First Tee, as well as I'm involved with Ronald McDonald House. So client events and supporting those client events and industry events are very important to getting the message out about our brand and what we do. And then last, key account management program, CRM, customer relationship management. To me, this is the backbone, right? You need to understand, what does that totality of that relationship look like with that client? And again, no surprises, and anticipate, what things are coming up for that client, and also provide thought leadership for clients. We're starting a risk manager advisory council. I'll share with you, it's just coming out of off the blocks. And I'm really looking forward to it because I participated in a few in the past. And that's a great way to network with your peers. And as risk managers, I can also share with you, very important for your careers and for underwriters and for brokers, right? To have that network of people, right? Have the network of people who are your peers, people above you who will give you counsel as a mentor-mentee relationship. And again, if you don't have someone like that in your career today, I encourage all of you to get someone who's going to assist you throughout your career. Next slide. Thank you. You know, we say it takes a village. And what I mean by that, you've probably heard the saying, in our company, we really, when we have wins and it's cross-selling and multiple products, it really truly takes a bunch of people coming together who don't necessarily know the different product lines and how they all come together for the client. And as a group, making sure we understand, first and foremost, what is the client trying to solve for, right? It's one thing to sell insurance products. It's another to sell solutions for clients that meet their needs. And that's one of the things I think that we do really well as an organization. And then the other thing I point out is this long-term nature. I mean, to me, as a risk manager, I wanted to build long-term relationships with my broker partners as well as my insurers. Going back to what we said earlier, when that claim comes in, I always felt it was very important that I had a relationship with executives, not just the claims people, but also executives within that insurance company, in that brokerage company. So I could make sure that I was doing the best job I possibly could for my company. This is something, the next one, understanding Everest products and services and risk appetite. When I first joined the company, I wasn't from the underwriting world. I was a risk manager. And we have Dane gave me this thing we call it the flip book. And I immersed myself in it to understand what is our risk appetite for commercial casualty? What is our risk appetite for risk management? And it's so important when you're out there talking to broker partners and clients that you're not wasting people's time, is probably not the right way to say it, but that you're being very targeted in what you're trying to achieve, right? And so understanding what our risk appetite is, overlaying that with the risk, you definitely can diffuse a lot of wasted time with people, right? I mean, if our risk appetite, let's say a certain line of business is not there, then let's not spend a lot of time talking about that product. But again, we spend a lot of time as an organization making sure our broker partners and our clients understand our risk appetite. And I'm going to give you an example of a product that we just set up recently, Provide Solutions. So everybody, I think most people on this call know, the umbrella market, the excess liability market, had a tremendous change of price and rate over the last 2 years. And it continues in some, I'll say some industries, continues to go up. And what we did as a company, we stepped back and we said, how can we help our clients manage through this? And it is a cycle. Our industry runs through cycles. And we came up with what's called Buffer Flex. What it basically allows is a client who has a lot of good data about their losses to take more risk down low, push the umbrella and excess up, thereby through a multi-year deal, it's a better risk financing strategy over the long term, right? And so that was a product that we just came up with recently as a firm. And again, that was based upon talking to our clients, talking to our broker partners, looking at what we can do as an organization with the strong balance sheet that we have and support those clients. But again, it takes a village. This was corporate underwriting. This was our actuarial team. These are the underwriters. And as I like to say to people all the time, I'm not an underwriter. They don't give me the pen at Everest, and that's a good reason they don't do that, right? So next slide. Okay, so I ended with this slide only to say, if you have both Dane and I there as contacts, if anybody ever wants to reach out to us, more than happy to speak with people. But more importantly, we want to hear any questions that people may have of either one of us at this point in time. Thank you.
Thank you so much. Folks, you can feel free to either unmute yourself right now if you have a question, raise your hand, or type it into the chat.
I have a question for Tim.
Hi, Brandon.
Hey, how are you doing today? You mentioned that you were in risk management before. What companies or company was that for?
Yeah, well, I actually, just to give you a quick rundown of my career, I started A&A, Alexander & Alexander, as a broker. But from there, one of my clients was Texaco. Some of those may remember that brand of the oil and gas industry. And as a junior broker, I was actually in the marine insurance world. I went to the Merchant Marine Academy. And during that time, I gravitated to the marine energy side of the business, which clearly Texaco was. I was a junior broker. A job opened up in Bermuda. Now, I don't know about the rest of you, but if you haven't been to Bermuda before, it's not a bad place to work. And I was given an opportunity early in my career to go down to Bermuda and work for a company called Headington, which was at that time a $1.2 billion captive owned by Texaco. So again, going back to what I said earlier, now what was my experience in captives? I was 27 years old. But, you know, I said to myself, I'll give it a chance. But to go on further, from there, my career, I came back, worked for Whitco, which is, if you've ever heard of Kendall Motor Oil. I also worked for Tosco, Prudential Financial. So during my career, I mostly stayed in the financial services industry or energy. That was my two industries I gravitated to. I used to say to people all the time, I liked industries where you had boom in the night, right? It was, you know, when you work in the energy business, it's a lot going on, right? It's a 24/7, 365. When you work in the financial services industry, it's more of an E&O, a professional liability risk that you're dealing with. So it's more esoteric. But both were very challenging and brought different risk profiles to the table. Probably the most rewarding thing I did, though, is ERM. I broke into ERM at Prudential first and developed an ERM framework over the years. And that CBRE ultimately branched out into security, both executive protection, health and safety, business continuity, crisis management. And again, very rewarding over the years, the opportunities I had. And I'd also point out that I always took it as a good thing when someone came to me and they were going to leave working for me. You know, they were going out on their own to become a risk manager. To me, I felt for me, that was something that I really enjoyed, seeing people's careers blossom and grow. And all of you, again, goes back to having peers and mentors and helping you advance your career. Hopefully that helped you, Brandon.
Of course, it sounds like you had an incredible journey.
It's like I said, I've never been bored.
We have a question in the chat from Derek. Question for Tim: how should us entering the industry best emerge ourselves in emerge ourselves in underwriting or producing? I know you mentioned you dove into a booklet recently to understand it more and asked a lot of questions. Any other tips? And Derek's mic and camera aren't working, so that's why he's popping in the chat. We appreciate it, Derek. Thank you.
Well, first and foremost, on the underwriting side, spend time with underwriters. Right? If you're not an underwriter, try to see it from their eyes. Because a lot of times, you know, as a former buyer, risk manager myself, you know, sometimes, you know, you need to appreciate what it takes to underwrite a risk, whether, you know, it's capital allocation issue, et cetera. So, you know, I spent a lot of time my first year at Everest meeting with the different underwriters, right? And truly trying to understand it from their lens, from their viewpoint on why they took certain positions. I will share with you, there are times I didn't necessarily agree, being a former risk manager, with the positions they took, but at the end of the day, they have a book of business that they have to manage to, and a profitability level they're looking to achieve and return on capital. On producing, being a producer, and now I'm going to take it more from a broker perspective, that's a unique skill. Selling in our industry, you know, it takes time. It takes time to build relationships. And what I found over I've been in the business 35 years, it's more difficult to move business today than it ever has been, right? Used to be in the day I knew Dane and Dane knew me and we'd do business together. Today, companies are they're looking and scrutinizing it much closer on who are they trading with? Is this the best organization to be trading with? So again, if you're looking to jump to a producer type of role, just know in risk management, it's a 2-3 year process to move a major piece of business. It doesn't happen overnight. So have patience, but also, again, don't be afraid of it. Be uncomfortable in your own skin, but it's very rewarding when you move a nice piece of business, right? Or your company takes on, you know, some nice new accounts that you feel really confident that your skills help bring that into the organization.
Awesome. Thanks, Tim. We have a question from Noor in the chat. Noor, would you mind unmuting yourself and sharing your question?
Of course, yes. Can you hear me?
Perfect.
Yes.
Yeah.
Well, I'd like to start by saying thank you so much for all the valuable information. I'm going to go ahead and send you an invite in LinkedIn after all of this is done, so please accept my connection.
I will.
So I'm just wondering, what are some of the general insurance or risk management exams that you would advise us to take as students to boost our careers after graduation?
Well, first and foremost, it depends on what track you want to go in, right? And Dane, in fact, Dane's probably better than I am talking about because he has a number of those designations. But I have a son who's early in his career in this industry for one of these other insurance companies. I'd say that if you're going to go be an underwriter, CPCU. You're going to be a risk manager, the AIRM, right, or fellowship. But I'm going to turn it over to Dane now, since he has a lot of those initials behind his name. Go ahead, Dane.
Thanks, Tim. No, I think you nailed it, right? I mean, if you're looking to become an underwriter, I think the CPCU is an outstanding experience. It's not easy. It's long. It's 8 classes, so it's a lot. Once you start your employment, if you haven't already, a lot of companies will pay for that as well, and they'll also give you some financial incentives along the way. I started doing my CPCU when I worked at a division of General Electric. GE used to own a large insurance company, and I think now it's been a while, but I think I got $500 for each of the 8 classes when I passed the exam, and I think I got $2,500 for getting the CPCU, and they sent me and a +1 to the conferment ceremony. So I got to a free trip out of the deal. So that was pretty good, and I felt like I learned a lot. I think it gives you a tremendous amount of credibility if you're on the underwriting side. Later in my career, I got my ARM, my associate in risk management. And I think if you're on the risk manager side of the house, and even as an underwriter, it adds a tremendous amount of credibility. It gives you a different way of looking at things. A little bit easier too, if I had to be honest. It's 3 classes. So at that point in my life, I had already done my undergraduate degree. I'd done my graduate degree. I'd done my CPCU. So taking on the ARM was like a walk in the park comparatively. So they're both important. I have them both. I know people that have way more than 2 designations, but I would think they're 2 of the basic building blocks for building credibility in the space.
Thank you so much.
I have a quick question while we're waiting to hear any others. Tim, I feel like you've shared so much really vibrant and important career advice, and Dane as well. But Dane, I'm wondering, not to put you on the spot, sort of what's your #1 top tip? And Tim, if you want to answer this as well, for if you say you're a current senior right now, you're looking to go into the industry, maybe you don't know which direction you want to go. What's your top tip for someone in that position?
Great question, Rachel. And I think a lot of that's going to vary depending on your career interests and what you want to do. So I'll kind of go a little bit more broad, and if necessary, I can bring it back down to a level of specificity. For me, I think the #1 thing is to take chances. Put yourself out there, be engaged. A risk manager friend of mine told me early on in my professional career when I was trying to sell him a piece of business, he said, if you don't ask the question, the answer is always no. So I think it's important to reach out, to ask, to seek guidance. And I'll give a little bit more broader career advice. The company you work for matters, but what matters more is the individual you work for. I've worked for really bad bosses at great companies, and I've worked for really amazing bosses at mediocre companies, and I've worked at all combinations thereof in my career. And I would say when I had an amazing mentor or a coach or a manager, it makes all the difference in the world. So it could be the greatest company in the world, but if you work for somebody that's kind of not so great, it takes away all the excitement of working at a great company. So I would associate yourself with really good people, build a network, and if at all possible, choose great people over a great company, because great people will make all companies great. I could give I'll build off of that just for, a rip from the headlines, real life example. I've been at Everest 6 years. I worked with Megan at my prior employer. When I left Swiss Re to come to Everest, I didn't know anything about Everest. I didn't know anybody that worked here. I didn't really see them at the time as a competitor. But what I did know is the guy that was running at the time, who was my boss, John Zaffino, was one of the sharpest people in the space. And it was a little bit of a bet at the time. It was a bet on John, and it was a bet on myself and what we thought we could build. And I fast forward 6 years, and it was the greatest decision I ever made. You know, my career has gone in great directions. I've learned a tremendous amount. My network's expanded. And we took Everest from a kind of an irrelevant player 6 years ago to a top 20 carrier with all of our chosen intermediaries. So for me, that's was very gratifying. I built a great team, hired Tim as part of it. Really had an amazing experience. That's because I aligned myself with a really awesome leader that helped me grow professionally.
You know, one of the things I share with my 3 children that are in the industry, the one's in the industry, one works for BBC, my daughter's a nurse. And I tell them all the time, if you wake up in the morning and you dread going to work, or Sunday night comes and you're feeling the blues, change jobs. Don't sit there, right? I mean, life's too short, folks, to go to a job that you're not motivated to be your best, right? And, like Dane said, work for a company that's going to support you and what you want to achieve in your career. Make sure you have a boss that is going to help you achieve your career goals. And don't be afraid to have that conversation. What do you want to achieve? You got in this industry. Talk about it in 3 year, 5 year out. Like where do you see yourself, right? And ask, what are the skills that you need to acquire along the way? You'd be surprised at the people you meet along the way who will come back into your life later on in your career, right? And so again, that network is so important. Peer-to-peer review is so important. But I implore upon all of you, if you're in a job that you really don't like, don't stay there. Life's too short.
That's great. Thank you both. I'm going to open the floor up for another minute for more questions. If you have anything, please feel free to ask or write it in the chat.
I do have a question for both of you. First, Dane, you mentioned that you'd been with Everest for 6 years, and before that, Swiss Re. Have you always been in insurance in your professional career, or have you gone and worked in other areas? And then for the second question, if you both could tell us a little bit more about what you might have studied in college and your path through college that got you to where you're at now.
It's a great question, Brandon. And unlike all of you, I didn't know that I wanted to be insurance when I was in college. My undergraduate degree was in mechanical engineering, so a little bit different than insurance. And I started my career working at United Technologies, so very different track. I left UTC and went to work at General Electric. I went to GE Capital, and I was doing finance and leasing for commercial equipment. I had started my MBA, wrapped up my MBA, and got a job at GE Corporate Marketing at the world headquarters. At the time, it was in Fairfield, Connecticut, working for the Chairman's Initiative on Boundary Selling, which was an amazing experience. It was a job designed to be an 18 to 24-month job, and then you were supposed to go out and do something big for GE. And I was all set to go work for GE Healthcare in Waukesha, Wisconsin. My favorite leader at GE was a guy by the name of Joe Hogan, and he ran healthcare at the time. And 9/11 happened. And it changed everything overnight. And GE at the time owned an insurance business. And I was kind of tapped on the shoulder and said, change of plans. We need you to go to New York and be responsible for the industrial risk insurers, IRI, office in New York City. So I went into that. That's how I kind of fell into insurance, because GE owned an insurance company and they asked me to lead the New York operation. And the rest is history. But at the time, I will say, I thought insurance was going to be a transitory stop on my career within GE. And shortly thereafter, GE sold their insurance holdings to Swiss Re, and I got sold along with them. And then Swiss Re spun my business out to XL, so I kind of got sold again until I rejoined Swiss Re in 2012. So kind of fell into it. And I would say, honestly, in my first 4 or 5 years in the industry, I saw myself as a business person doing insurance and didn't see myself as an insurance professional. And about 6 or 7 years in, I kind of realized, hey, this is my career now. This isn't like I'm no longer a GE guy doing insurance. I'm an insurance guy that used to work at GE. So, it's been going 20 years now in the space, but I think I've come to terms with the fact that I work in the insurance industry now. I think it's a great industry. I wouldn't change a thing. I've learned a lot along the way, met tremendous people, and it's been a real positive experience.
Brendan, my way of getting in the business was, as my dad said, go get a job. I went to the Merchant Marine, as I said before, and I was waiting in a union hall down in New York City for a ship. And one of my classmates came into the union hall and said he just went to this company called A&A, Marine Insurance. And he said, I'm not going to take the job. I'm not interested. The next week I went up and met with the guy. He was the class of 1956. He offered me the job on the spot. I started on Monday. So, back when I got out of school, you didn't have the curriculums you have today in a lot of the universities. Who knows if I would have picked insurance? I'm not sure. I didn't have a family member or someone who was in the industry. I guess what I'd say to you, as I said before, your end destination, you may start in insurance, but you may not end in insurance. But the skills that you along the way will just will enhance your life and your career, right? But again, if you want a job that's going to keep you every day engaged, I find the insurance business isn't that bad. Someone asked about an MBA, and I know, Dane, you have one. I started my MBA. Back then it was called the College of Insurance. It's now part of St. John's. I then moved to Bermuda, so I never finished my MBA program. But Dane, what I would say for me personally, and I talked to my sons about it, it's really today, you got to look at the role that you're in your organization and how they value that and what you're going to get out of it, right? It's a very expensive proposition getting your MBA today. And so the question I'd ask all of you is, if you're considering an MBA, is your company going to support you, and why are you getting that MBA? What is it? What are you, by getting an MBA, do you believe that you're going to be tapped on the shoulder to be a CEO versus not having an MBA? I know I've looked online, you look at CEOs, and a lot of them don't have MBAs, folks. I mean, at GE, they had their own internal education, right? And so a lot of the executives there didn't have MBAs. They actually had, the GE way, if you will. So Dane, I don't know, you have an MBA, maybe you could share.
Yeah, number one, if you can work somewhere where they're going to pay for it, all the better. So I was fortunate when I started my MBA, United Technologies started paying for it. And when I completed it, GE decided to foot the rest of the bill. So I never paid for it, which was great. I paid for it with sweat equity by working for those companies and for the amount of studies that went into it, because I worked full time while doing grad school part-time on nights and weekends. I think it's a personal choice. I don't think, I'm big on continuing education, so I'm always trying to learn new things. I think, you can't go wrong always trying to better yourself and learn more. My best advice, though, is to not do an MBA right out of college. I think, I know people that do that and it can work. But my recommendation is typically go get some real world experience, because a lot of what you study and practice in learning for an MBA is teamwork, and people bring their real life experiences to the group work. It just gives you a better foundation. I think it'll make the degree worth more when you can compare it to what you've seen in the real world. So I would always recommend, don't do one of these programs where you do 4 years undergrad and then can roll right through into an MBA. I'd always recommend take a step back, get a couple of years, 2, 3, 4 years of business under your belt, doing whatever it is you choose to do. Then when you go for that MBA, it's going to be a lot more relevant, and you're going to be able to add more and you'll be able to take more away. So I thought it was valuable for me. I'm glad I did it before I had as big of a family as I have now. So at the time, it was just my wife and I, so it was a lot easier with my weekend commitments. But now that I have a bunch of kids, I think that the studying on the weekends would be a challenge.
Thank you both. And yeah, Megan mentioned this in the chat, but shameless plug for Spencer. If you're looking to pursue your MBA, either full-time or part-time, we do offer scholarships for you. So please feel free, if you're ever looking to do that, pursue that down the line, to reach out, ask us about that process, and apply. Any other questions? Not seeing any more in the chat.
I have another one.
Go for it, Brandon. Thank you.
Yeah, not a problem. One of the more exciting things that I've learned that's kind of new to the insurance world is parametrics. What are some other interesting areas or products that are coming out that you all find very intriguing and see a lot of growth in their future?
That's a tough question, but it's a good question. I think we're seeing a lot of interest right now, clearly in cyber capabilities, and more so than just insurance, things that can provide a level of services along with that. So there's a lot of innovation right now in that space. Pandemic insurance is something that's incredibly timely. I don't know that there's a really good solution out there right now, but there's a lot of talk of public-private partnerships. And I think we'll see more coming out of what we've gone through for the last, 15, 16 months with COVID. One of the things that insurance companies are really good at is paying claims. And one of the things the government's really good at is funding for a disaster. So, there's talk and thought that insurance companies can be the mechanism for the government to get money quickly into the hands of people that need it. So, there's a lot there, but I think pandemic will be one that we'll see certainly more insurance solutions designed around. And the one that, today you hit on parametrics, which are interesting, especially as we're in cat season. But I think cyber is the one where there's continuous innovation. And frankly, with whether it was the SolarWinds hack or some of the ransomware that we've seen recently with one of our competitors with another insurance company with the pipeline, it's clearly timely, and the solutions need to be a lot more than just an insurance policy. I think there's a lot more technical solutions that need to be built in as far as risk management, prevention, education, analysis, and we're seeing a lot of products designed to provide that.
Randy, I'll share with you one of the things that used to be involved with a group called the M200, which was a global group of risk managers, risk professionals. And we debated over the years about cyber coverage. And what I mean by that is right now in our industry, there's multiple policies potentially respond to a cyber event. To me, the industry needs to, this is my opinion, the industry needs to move towards an approach where I have a cyber event, it's covered by a cyber policy, whether it's first party, third party, et cetera. Now, I will tell you, there's a lot of risk managers who like the idea that I can go tap I got a ransom claim, I can go to my K&R policy, I could tap my property policy, I could tap my, whatever policy it may be. But again, I think that just adds to litigation. I think it adds to confusion when a claim comes in, priority of payment, who pays first. So I think that's an area where I think the industry, as Dane said, cyber coverage, but clearly, some of these events that we're going to see, and again, we've seen tremendous amount of frequency in this past year with everybody working from home and companies, obviously looking at their firewalls, et cetera. I think that's something that will come. Just like Dane, you probably remember back in the environmental, right? The environmental coverage was like that at one point, and they basically made it a peril. They pulled it all into one policy. The other thing I'd say is InsurTech. InsurTech, our industry for years, people say we're inefficient, right? It's inefficient. And what I would say to you is there's been a lot of people that have been trying to come into the industry and disrupt it. But at the end of the day, you know, a lot of these companies that have come in have not been as successful as I think they thought they could be. I'll say it that way. That being said, I still think InsurTech and FinTech will improve execution, will improve products and services, et cetera. I definitely think there's a home for improvement in that area as well.
Great, thank you. Any other questions before we conclude today? No, all right. Well, on that very topic, first off, before I just really express our deep gratitude, Tim and Dane, I want to mention that next week we are having another one of these sessions on Thursday, same time, same place. And it is very relevant to what you were both just talking about. The topic is cybersecurity demands a modern risk management approach. It will be presented by Zurich company leaders, including David Schluger, Ron Davis, and Jessica Aguilar. So we hope that you'll join us then and continue that conversation there. The registration link is the same one that you would have found today's session on. So hope you'll join us. And Tim and Dane, thank you so much for this really robust session and then this wonderful Q&A. I think the advice that you just shared for this group is really invaluable. So thank you so much for being open to answering all of these wonderful questions. And thank you to our audience today for being so interactive and joining us and having your cameras on and sharing your questions with us. We really appreciate it. So thank you so much. Thank you, Tim and Dane, for being here.
You're welcome.
Thank you.
All right, everyone, have a great rest of your day.
Thank you, Tim and Dane.